I posted one TikTok video for the past 60 days. Most of my videos got an average of 250 views per video, which may not sound promising, but I didn't stop. I kept posting every single day. One day I noticed that one of my videos started getting traction. The analytics of the video was pretty interesting, at least for me. The video received around 22,000 views and 177 viewers added it to their favorites. And this is the video. If you own a rental property in your name, the rental income will be taxed at your marginal tax rate. And if you own a rental property through a private corporation, the rents will be taxed at 47%. So what's the solution? If you're a real estate investor and would like to expand your real estate portfolio, a three-tier real estate corporation structure will help you to save on tax. Here you will have to start a holding company, and this holding company will hold 100% shares of the property management company and the real estate company. This structure will allow the holding company to hold more after-tax dollars to expand your real estate portfolio. This structure will help you to treat your rental income as active business income. This structure can help you to protect your assets from creditors, protect you from lawsuits, minimize your tax hit, and makes it way easier to expand your investment portfolio, and succession planning will be way easier. A lot of real estate investors commented on when and how to set up a three-tier company structure for their investment portfolio. So I decided to make a detailed video on the three-tier real estate corporate structure. Even though this benefit may sound promising, it's not always good to choose a three-tier real estate corporate structure. When we include the cost of professional fees associated with a corporation, in most cases, the use of corporation does not make sense. If property is purchased under your name, any operating losses can be used to offset other personal income. If the property runs an operating loss and is owned by a corporation, those losses will remain in the corporation and can be utilized once the rental property incurs a profit. The administrative burdens for a corporation are far greater. For example, in a proprietorship, the owner can take out the money from a corporation without payroll source deductions. This is not the case when the owner takes out the money in the form of salary from a corporation. We don't always need a corporation to save us from legal liability. In a proprietorship, we can cover any potential legal liability with insurance. Now we can talk about the advantages of a three-tier real estate corporate structure. One of the major benefits is the lifetime capital gains exemption. In Canada, you can sell the shares of a qualified small business corporation and get a capital gains exemption up to $900,000. If you, your spouse, and your two children are shareholders of a family business, often through a family trust, you could potentially sell your business for $3.6 million tax-free in the future. The next major benefit is the income splitting. It is possible to utilize discretionary shares that allow corporation to stream dividends to a particular shareholder or shareholders that can include your spouse or your children. The third major benefit is that it can protect you from potential legal liability and can provide protection from creditors. The last major benefit is the tax rate. The tax rate of an active business income is 15%. If you can classify your real estate business as an active business, you could take advantage of the lower tax rate and can pay tax-free dividends from the real estate company to the holding company. Now I will share my final thoughts. If you do not have legal liability concerns and cannot take advantage of the income splitting opportunities, starting as a proprietorship keeps your costs down and reduces your legal and administrative issues. Most importantly, if you do not have excess cash flow from the properties, there will be limited tax benefits from incorporating. Buying your first few rental properties under your name will help you to figure out your interest in real estate. Later, you can expand your real estate portfolio by setting up a three-tier real estate corporation. On a final note, if you decide to transfer your existing properties to a corporation, you will have to pay taxes like land transfer tax. So I hope this video was helpful. Thanks for watching.